folks, Dan Ferrier here, the Mortgage Update. Today is May 13th, 2020. So I hope you like the new format. We got more and exciting things coming. I actually have people coming and doing my walls and everything within about a week or so. So let's get on to it. Why you came to the show today. Well, got a lot of news for you today. So sit back, hold on tight, and let's get to it. What did rates do today? Well, first of all, this is the website. It will be changing as well in about a week or two. And it's going to be highly functional and high tech. But if you want my assistance, when you're all said and done, just go to therateupdate.com. So therateupdate.com, everything is being revised to that. But probably the best way to get a hold of us is just give us a call at 844-775-5626. So let's get on to it. What happened today? Well, we have a lot of volatility in stocks. The good news is we don't have much volatility with mortgages or mortgage-backed securities, and I'll get to that in a second. But Federal Reserve Chairman Powell came out and said there's going to be a lot of stimulus that's needed to kind of fix the system or help us going forward. And I think they're announcing another $1 trillion trench of trying to help support the country. And in the short term, I mean, it's going to help the markets. It's going to help the housing markets, those out there that are looking to refinance. A lot of people, it's going to, in the short term, it's going to help. In the long term, I'm still a pessimist on how all this is going to turn out. So that's why I'm basically pushing it now, saying, you know what, if you like the rates, if they can help you now, don't wait. And I have people sitting on the sideline saying, I'm going to wait and to see if they drop a little bit more, or just monitor the situation. Guys, I don't know if you've paid attention in the last week or week and a half. I was driving to work last week. I filled up my tank, and I think it was in the Chicagoland area. It was about $1.65 to $1.70 a gallon. And 4 or 5 days later, it's now $2.25. So isn't it funny how when things go up, they go up fast? Oil went up, it ticked up off its bottoms, and in days, you see gas prices going up, 30, 40, 50 cents. But when they're coming down, they go down really slow. You're going to see the same thing happen with mortgage rates. When all this comes out, one of the things that we're putting together is a blog to help educate everybody on a weekly basis on what's going on on a lot of fronts. Some of the fronts are going to be the economy. What's the economy doing? GDP, employment, unemployment, things such as that. We're going to monitor inflation. That's a big component of mortgage rates and what the stock market's doing. Freight indexes. There's going to be a whole slew of techniques and analysis that we're going to break down for everybody, so you can kind of get what a chain reaction of oil prices went down, that in turn pushed up stocks, that in turn drew down bond prices, which then increased the yields. So by oil prices going down, rates went up. How do we correlate all that together? And that's what we're going to start to teach you on the channel. So my prediction is, in the short term, things are going to be okay. The Fed's going to step in and do whatever they need to do to stabilize the markets and pump in liquidity. In the long run, I see inflation ticking up, and that could be devastating a couple years down the road. Let's worry about tomorrow when tomorrow comes. So right now, you're seeing a lot of stuff saying, the Fed needs to do some things, and Powell came out and spoke, and it basically crushed I won't say crushed. 500-point loss, 10 years ago was huge. 500-point loss today is like, okay. So we don't really, blink too much on that. So that's what's going on in the stock market. Why I talk about that. This all correlates together. So let's get on to what happened in the mortgage-backed securities market. And this is why people come and watch my show every day, and they listen to me on radio. And I always say, even my kids say, Dad, who watches or who pays attention or who listens to you every day on radio and your podcasts and your YouTube channel? And I'm like, it's amazing how a lot of people are trying to educate themselves on various things. and you try to work on your credit scores, or you try to do this to fix that, or you work out to get a healthier body or healthier, physically. Let's look at the biggest piece of your puzzle with debt. You might have a $20,000 credit card. That's huge. You might have a $50,000 car loan. That's big. But if you're a homeowner, you probably have a $300,000, $400,000, $500,000, $600,000 debt. So what we're trying to do is help you manage your finances when it comes to that piece of the puzzle. We're trying to balance some things, saying, it's a good time to refinance. Why? Mortgage rates are the lowest basically ever in history. Great. Well, how's that affect me? A lot of ways. And the one thing you want to watch is, a lot of people right now are trying to refinance, and they're just trying to keep above water. I get it. Most of the time when you call me, I'm going to ask you, are you comfortable with your payment? Half the time it says yes. Half the time it says, you know what, I just want to make it an affordable payment. I don't care how long it goes or whatever. That's fine too. But why I ask that question is I want to go in and say, okay, if you're comfortable with the payment and your rate's 4.75, I wonder if we got you a 3% rate on a 15-year term with the same payment, and you cut off 8 years of your mortgage payment, 8 years of $2,000 a month. 8 years comes to, and my math is terrible, so 8 years of payments, there's 12 payments a year, so that's 96 payments at $2,000 a month. That is $192,000 in interest that you would save. Think about it. So that's where the correlation of all this comes into play. Why we do this. Okay, now let's get on to this. Why do we watch this number? Most people, even in the mortgage business, are saying, oh, watch the 10 or the 2-year treasury or the 10-year treasury or whatever. I don't know why. There used to be very much it was coordinated between the mortgage-backed securities and the 10-year treasury. There's a disconnect right now. And that's why we follow this number, and I've followed it for years. And most of the people say, why don't you follow the 10-year treasury? Because it is not the instrument that determines mortgage rates. It just isn't. Mortgage-backed securities is the instruments. 10-year treasuries are not the instrument. And a lot of people thought and still think today that mortgage rates are pinned to the 10-year treasury. They're not. They're pinned to the mortgage-backed securities market. Okay, so what this number here dictates is the price that somebody is paying for this bond. Okay, we take all the mortgages that we do, and let's say we bundle them up in a package and we sell them out as a bond. So this is the price that you're paying for that bond to get that yield. Well, the higher the price you pay for that bond, the lower the yield that you're going to return. So we hate when this number is, well, yes, the higher the rate, the price, the lower the yield. So we love when this number is green. We hate it when it's red. We've had a lot of red recently, but that's really, it's not affecting things much because there's really no volatility in here. Basically, it's a little tick up, a little tick down. Let's say it's a stock and your stock price changed by a quarter. It really isn't going to, unless you owe a million shares, it's really not affecting your portfolio. So we watch this number right here and we start to see trends. So this is a 2-day trend, a 5-day trend, a 1-month trend. You look at this right here. This is what's crazy. Right here, back in March, this is when if you go back to my videos, I was like, it's freaky because we never see changes like this. And you can go back and see, look at that. That is nuts. So this went for months and months and months and months and months and didn't change as much as it did in these like 4 days. So those numbers are, we hate this in the mortgage business because of the volatility. What we have to do is to hedge ourselves. We inflate our rates because we don't know what tomorrow is going to bring because it's the dramatic swifts or changes they're dramatic we're in increments like that. It's not taking days. So that's why we follow the mortgage-backed securities market. Right now, things are stable. So I'm kind of keeping on the sideline with all of my clients right now because of this. Let me explain why. All right, here's the easiest way. And don't etch these numbers in stone, but at least hopefully it'll make sense. We can lock loans we can lock them up to 6 months. But normally we lock a loan on 15-day increments from 15 days to 60 days. Okay, so let's say, for example, I can get you a rate today on a 60-day lock at 4.5. I'm just throwing these numbers out there just to make a story here so you can follow. So on a 60-day lock, I can get you a 4.5 rate. Let me write these down so I can keep my train of thought. However, if we can bring that lock duration time down to 45 days, I might be able to get you 4.375. Okay? Let's say I can bring that down all the way down to a 15-day lock. I might be able to get you at 4.125. Those are extreme numbers, but that's basically how this works. So what I do, as long as the markets are steady, what I'm trying to do is buy ourselves time during the underwriting process to get you into a 15-day lock. Because if rates are staying steady like they're doing right here, if I can sit on the sidelines and wait till you're basically all done and approved and we're ready to close and lock you, I can get you a much better rate than I can the day that you put in your application. So that's why on my side, if you call the other big companies, they're going to say, you want us to lock you in today? And you're going to say, yeah, I like the rate. What they're not telling you, and what you're not asking, and what you probably don't know is, well, if you can hold off and wait on that lock until you go further along, you can get a better rate. So that's why on our end, and that's why I watch this every day, all day, so that I can advise my team and our company and you guys to say, the market's stable. Let's just sit on the sidelines. And that's why we do that. So that kind of, hopefully that makes sense of how we lock rates, and we kind of monitor the market to see if we can hold off and get you a shorter lock duration. Okay, so that's that part of the equation. Let's go to market news. Mortgage rates have eased back into some low levels. There's really not a lot of volatility, but we might have picked up. I don't even think the rates really changed today. They might have changed like 0.0 something, but they really didn't change. So that's a headline just thing to kind of get some attention. But you can see it right here. Really, this is, I'll go to the 1-day chart. Let's go to it. There's really nothing, the net effect here is basically nothing. You can see it's +1. It's not enough to really do anything to the markets. Let's go to another real estate news blog that we follow. We're learning a lot about remote buying or remote working, but why I brought this article up is right here. We're locked down in Chicago, but we're hopefully June 1st we will open up. A lot of other states are opening up, and you're going to see a flurry of people looking to buy homes. Guys, get ready, get pre-approved, and if you're already pre-approved, let me know what they're offering you. I need a solid quote. I've been getting quotes back, and here's what's coming back: here's this quote that I want you to review. The rate's 3%. It lumps in all the fees at $10,000. I have no clue how those, there's a reason for this. I have no clue what those fees are and what they are associated to. When you're buying a house, yeah, there are costs. There's legal costs, there's your attorney costs, surveys, all this other stuff that you don't have or normally have with a refinance. So it might be $3,000 or $4,000 to buy a home, and that's your legal side of the costs. But if they just come back and say, oh, those are normal fees, don't believe them. Break it down. What is the lender fees and what are the legal fees? Those are two big dramatic differences when you're getting a loan. So the lender fees are going to be discount fees, points, underwriting, processing, admin. They can throw in a whole slew of junk fees in there, and most of them do. So that's part of the lender charges. It's all those fees that I just mentioned, and an appraisal, maybe a flood cert, credit report. So those are those. It's usually maybe $1,200 to $1,500. Then on the other side of the spectrum is your legal fees. Well, no matter what mortgage company you go with, those legal fees are the legal fees. I don't control it. You don't control it. The attorneys between the seller, your attorney, and the seller's attorney, they do all of that, and they issue an invoice saying, here's all the legal side of the fees. I can't control that, nor can your other lender. So what I want to find out is in those $10,000 in fees, what's the breakdown? So don't take the answer of, oh, that's all just the normal fees when you're buying a house. It is not. Because I see every day people are getting charged between 1 and 2, maybe 2.5 points on the loan by the lender. What the points are is basically you're buying down the rate. So they'll wow you with this rate. Oh, I can get you a 3.5 rate, but you might be paying $8,000 for that rate. Where I might be able to get you 3.5. I mean, in many cases, I'm getting people 3.375 and no cost to them. So that's the variance. But if you don't get a breakdown of those costs, you're going to just say, okay, and you're going to sign it, realizing at the closing when you go through, it's like, oh my goodness, I just paid how much to the lender for this rate? So please don't do that. So if you're already in the process of buying a home, let us look at the numbers, but I need solid numbers. And we can, I can go out on a limb here and say I'll either get you a better rate, get you lower fees, and probably 80% of the time I'm doing both. And I looked at several today, and the average was about, I'll say I had them 0.125 lower in rate, but the costs on average were about $3,000 in savings. So that adds up over time. So if you're looking to buy a house, please reach out to us and let us try to help you. At least it's not even bad to have a secondary or a backup on that. Let's go and see what headlines are today. The Dow fell, and any other real estate news. Oh, here's another thing. Applications to buy a house are setting are on 4-week gains. So again, people, you're probably out there. If you're looking to buy a house, please reach out to us. We can walk you through the programs, the rates, the fees, how we structure it, all the options that you have. Most people don't realize they have an FHA option, maybe a USDA option, conventional financing, putting down 3% versus 5% versus 10%. There's a whole slew of things we can do for you. So I can't help you unless you reach out. So that's it for today. If we can be of any help, please, let me know. I'd love to help. The best way to get a hold of us is just give us a call at 844-775-5626. Go to the website at therateupdate.com. And what I'd like to ask you to do is please give me a thumbs up, share the comments. There's probably somebody out there that friend, family, neighbors, coworker that could get some benefit from this. And it's not a hard sell. If people do call us, I'll educate them as much as I can, give them the options. Somebody else beats me, God bless you. I do the best I can, but I can't win every time. But we'll do our best to kind of win your business. And I would appreciate you at least giving us an offer. So thank you so much for watching. Please give us a call. If you have a mortgage right now and the rate's over 4.5%, email me a copy of your mortgage statement and give me an idea what your credit scores are. And again, my email address is D for Dan Frio, F-R-I-O, at preferredrate.com. God bless. Take care. Have a great night. See you tomorrow.